QIP, definitely what is the purpose and what is the object, so far we are not finalized. Whenever in the right time, we'll be update to all the investors, and then only we have to going forward with their permission and fulfill all the compliances, and then only we have to address this issue. Nothing to worry, you will get prior notice and prior intimation and all the information prior to any.
Okay, sir. We will be waiting for your intimation with respect to that.
Because we are looking for the growth of the company.
All right. So a last question from my side, like this is a more historical question, like between FY22 and FY24, the percentage of value-added products to our total sales has gone up, right? In 2022, it was between 30 to 40%, and now we are seeing a 90%, right? But our EBITDA margins are in the range of 12 to 13%. So how come our margins aren't expanding if our value-added products are going? Is this a case that where value-added products are the margin difference between the value-added products and the other steel products is insignificant?
No. Here we have to understand that in FY22, whatever we were talking about that, it is 68% to 92%, but in FY22, our value-added product means we are talking about only MS tubes and cup holding. Okay. And in FY24, when we are talking about value-added product, we have to include that galvanized product, right? So here the galvanized product source of raw material is not integrated. That source of raw material we are purchasing from whether it is domestic or international. That is nothing but a HR coil. Okay. So therefore, but obviously the margin of the HR coil convert into the galvanized pipe or coil, it is lower than the whatever we are producing from iron ore to MS pipe.
Okay.
So therefore, as much as volume will be increased, the quantum will be increased. So automatically, whatever the blended EBITDA is coming, that is you are looking that key, it is almost all 100, 200, 500 rupees is more. But when the value-added product is so high, why it is not multiplied with that? But it is not the fact that because almost all in that 98%, we are selling our GP product is almost all 65%.
Got it.
So therefore, the margin of GP product lesser than the margin of Part2 EBITDA of MS pipe.
Mm-hmm.
You have to understand the basic mathematics in that.
Got it. So basically, you are saying that the EBITDA per ton for galvanized things is higher, but the margins, like from the conversion margin between iron ore to MS tubes, were greater than those of coil to GP, right now?
Yes. Very true.
Okay. Thank you for your answer. That's it from my side.
Thank you. Next question is from the line of Harshit Zaveri from Pi Square Investments. Please go ahead.
Hi sir, congratulations for a stable set of numbers. Just wanted to confirm that what are our capex plan for FY25 and FY26? We have already spent a significant amount in last 2 years. Do we see any major capex ahead or just maintenance capex going ahead, sir?
Harshitji, hello. Sir, major capex so far, whatever we have spent, that is the major capex against our capacity. And we have little bit on pipeline. As you are aware that already we have discussed about that our Anantapur unit, we are expanding another sponge iron capacity by another 36,000 metric ton per annum. So whatever our existing will be going to double. So all are reflecting in our TV. And whatever recent past, whatever the acquisition, brownfield project, asset acquisition, that is so that is the major thing in this capacity. So far. So
okay, so how much do we plan to spend further in this year as well as in FY26 in terms of how much outlay we plan out?
No, you have all those in the balance sheet itself. In the balance sheet also, if you check that balance sheet, the total 31 crores almost all is into the civil. Okay. So in that 31 crores, we are already another 15 to 20 crores we have to pay it to enterprise for acquisition. And these figures are including for Amrapur. As and when we got the permission from the Pollution Control Board, this belief will be converted as a property plant and equipment. That's all. So nothing much more. But there is no abstract figure where we have to be obvious. So this is the ultimate figure for up to the capacity, whatever we.
Okay. So basically, with the current CapEx already spent, we will be able to achieve the FY26 target without any further CapEx.
Yes. Absolutely, you are into the correct. Without doing anything.
Yeah. Understand. Sir, I also had a question that...
One more thing, Harshadji. Basically, we have to understand when we are talking about this particular segment. This segment is actually basically cement segment, steel segment, power segment. It is capex-based, capex-oriented segment. Okay? It's not a service-oriented system. It is a capex-oriented segment. So therefore, like for an example, rolls are manufacturing for pipe and coil. So basically, rolls also we are taken consider as a capex, and after the life is over, we are selling out and again we are purchasing. So such kind of financial metrics are reflecting in your balance sheet, but at the same time, if you check in the P&L also, in the other income, we are showing that some asset sale also.
Right, sir. Understood. Sir, we had plans to expand our dealership network in zones like Western and Northern India, like we don't have presence in Gujarat, Madhya Pradesh, and northern states. How do we plan out to expand in these states with new dealer network to avoid that concentration risk of the southern India?
Basically, already we have engaged so many dealers in that particular segment. Here we have to understand that what kind of product we are selling to that dealer. So basically, our target is to sell in Gujarat and southern. That part is not pipe, it is coil, GP coil. Okay. And next question is how we have to increase the dealers and what is our thought process. So whatever the present capacity we have and whatever the market demand we have in our existing geographical territory, that is almost all optimum. So whatever capacity that can meet in South India and surrounding the South India. But at the same time, unless and until geographically we are expanding, we cannot cater fully in that particular area. But our team is already engaged and we are very much closely, our team is working on.
Understood, sir. Also, sir, I had a question that do we see any risk from Chinese imports or Chinese dumping of products at a lower rate, pushing down the prices as well as because the volumes which those guys can produce with similar product line, do we see any risk in the future?
No, see, Chinese dumping, we are not impacting directly because China will dumping. So basically, they will be dumping the flat good, which is our raw material. As in earlier candidates already I have explained that I'm getting little bit of credit in imported coil and lower price, or because of imported coil because of coming from here compared to domestic purchase. So basically, as far as Hariom balance sheet, Hariom financial, we are not so far facing any Chinese dumping issue because we are not the producer of HR coil, hot roll coil through blast furnace route. Right? So we are the producer where we are producing galvanized coil or galvanized pipe. So whether it is coming from China domestically, our keen interest to better quality and lower, which we are getting. So as far as Hariom concerned, we are not facing any sort, looking any challenges for China dumping. But if you are talking about broadly about Indian economy or Indian state growth, yes, that's the threat for this. overall India contributes. It's a threat.
Yeah, but those Chinese guys are also dumping pipes and tubes as well, and oil. I know
Only coil. Government of India directly passed the import duty on China, directly import. The little bit of material are coming from Vietnam. Now government is strictly prohibited on flat products. Without BIS, nobody can export to India. So therefore, almost all 90% problem is resolved. 8% are persist. So we should be, I think, in the coming quarter, it will be sorted out. It's not a big issue.
Understood, sir. Sir, last question from my end. The 2,500 crore guideline which we have given, what type of margin trajectory do we see at EBITDA level? Like, can we get back to that 14-15% mark, or we'll stay at this 13-13.5 mark with the current scenario?
If you think that if you take into the consideration of the current scenario also, it is also a very lucrative figure, isn't it?
Yeah, but
2,500 crore top line versus if your current EBITDA percentage is 13.48. So this is almost all not even 337 crores EBITDA. It's a very lucrative figure. It's a very lucrative figure. So why are we supposed to comment on the future aspect? It should not be the correct thing. But as far as whatever you assume that, to take into the consideration the correct current scenario, then also it's a very satisfactory figure.
Understood.
But our vision is much more better, much more bigger than that. But anyhow, this is also very satisfactory. 337 crores is not a small one. It's a very good figure.
Okay, sir. Thank you and all the best, sir.
Thank you.
Thank you. Next question is from the line of Darshil Pandya from Fintrust Capital. Please go ahead.
Hello.
Yeah, Mr. Darshil.
Sir, all the other questions are answered. Just one question was on the guidance part. Have you given any guidance for this financial year?
Pardon, sorry, can you repeat once?
Have you given any guidance for this financial year?
In our earlier investor presentation, we have disclosed. I don't think so whether you have followed or not. So anyhow, our target is near to 262 to in between 250 to 3 lakh metric tons of steel we want to sell, and we are very much keen about that. So anyhow, we have almost all achieved 1,14,000 something so far. So another 60% are then 60-70% if we take into the consideration of 250.
Got it. All right. Thank you so much.
Thank you. Next question is from the line of Pankaj Motwani from Equirus Wealth. Please go ahead.
Yeah, thank you for the opportunity. So my question is on the product side. So like I want to know like how is our product is different from other listed players like Hi-Tech and JTL, because our EBITDA pattern is much higher than that of other peers. Like our EBITDA is around 7,500 and peers is around in the range of 3,000 to 4,000. So like what is the differentiating factor from in our product? So I just want to know.
I'm sorry, but your sound is very disturbing. Can you repeat? Echo. So can you repeat once? And please slowly, if you repeat, then I can able to catch and answer.
So like I just want to know on the product side, like how is our product of Hariom Pipe is different from other listed players like Hi-Tech and JTL, because our EBITDA pattern is much higher than that of peers, like because our EBITDA is around 7,500 and other peers is in the range of 3,000, 4,000. So like what are we doing different in terms of product that our EBITDA is higher?
Sir, basically, whatever you are taking name, I should not comment on that. It is my platform. So as far as Hariom concerned, I don't know about them. As far as Hariom concerned, we are having two mixtures. One is integrated, totally integrated from iron ore to end product of MS tubes. And another is from galvanized unit where we are purchasing HR coil and doing convert into specialized steel in various for various industries, various segments, not only only the commercial segment. We are doing other various segments. So therefore, our margin is much more better. Much more better means I am not talking about better or lower because I am not comparing with anyone. It is satisfactory mode. Okay. Now, if you are whatever name you have taken, I don't think so. Maybe I am wrong or right. I don't know. You are the better judge. I don't think so. They have certain raw material sources by their own. They are totally for MS or GP, whatever the product they are manufacturing. For that, they are totally depend to purchase the HR coil. Yeah. So that is the one only major reason, I believe. Even though I don't know about them.
Yeah, so my like a follow-up question on this. So like even our new addition capacities, which is in Perundurai and this 120,000 metric tons of new capacity in Mehboob. So these are also the non-integrated capacities. So like what's your outlook on the margins? Because these are non-integrated capacities. So the margin will not be like that of integrated plants. So like what is our margin outlook on this? Because I see
that is the reason. That is the reason in your previous participant also asking the same question. When the FY22 our margin is standing when our value-added product we are selling 60%. Now we are selling 98%. Why the margin is not increasing? But the EBITDA is not increasing as we have increased our value-added product. So in this regard, I had explained that our margin related to galvanized pipe or galvanized coil is lesser than the MS pipe as it is from integrated sources, and this is that source is from HR coil, so which we are purchasing domestically and internationally. Therefore, the margin is lesser than the MS pipe because it is from through integrated source.
Yeah. So like, because these are the new capacity, so I think this will ramp up in this year also. So like the impact of the new capacity. So like, can we expect the margin to decline further from this part? Because this capacity has been started giving revenue from this year only. So like how as we ramp up forward, so because of the increased portion from this non-integrated capacity, so like margin will be, I think margin could also decline. Like I just want to know your view on this, like how things will be.
See, here the question is, your point is I understand. What I understand, please correct me if I am wrong. My point is, what you are wanted to know from me, we have addition the new product basket that is galvanized in Perundurai and Mehboob togetherly almost 3 lakh metric tons per annum. If the margin is lower, then what will be the impact in that? Isn't it?
Yeah.
So my point is here we are different from other key players. That is, we have so many in presentation. We have clearly mentioned that we are operating through tie-up mix. We are the India's first steel manufacturing unit where the entire pipe consumption is coming from solar. Our operating cost is cheaper than others. Our power cost after the raw material power is one of the major costs for raw manufacturer in the steel segment. So our power cost is cheaper because of the renewable power and other facilities and latest technology. All those together, and moreover, we are having that integrated system, so therefore we are able to reduce the logistic cost of it. We are having that short charging facility where we can able to reduce the carbon and as well as coal consumption. The part and parcel, bits and pieces, all togetherly manage your profitability and your cost of production in our finance structure. So all togetherly, it will be helpful to reduce or comparatively to the other in terms of cost of production. The second thing, more important thing, right now the question is how we will be able to increase our EBITDA margin in the value-added product like galvanized. That is the question. In that case, we are talking about that when we are producing certain specialized steel, where we are talking about 0.6 mm thickness, lesser than, which will be used for specialized fan industry, automobile industry. Their realization is much more, where your operational cost, your cost of production is remains same. So therefore, we are getting better margin than us. That is the ultimate in future, which will be achievable. It can be achieved.
Okay, got it. And just one more question, like I just want to know the status of the capex on sponge iron capacity. Like I think it was about to complete by FY24 end. So like, what is the status as of now?
See, already we are showing if you go through with our financial result in the capital after the first asset, property, plant and equipment, after that in the B part, capital work in progress, these amounts are reflecting. Only the issue is, as you are aware that recent past, Andhra Pradesh government has changed and the new government has come. And simultaneously, when the government has changed, the new government has come, pollution control department, the entire committee has changed and the new committee members have appointed. Now they have to, we have submitted our proposal to the government of Andhra Pradesh Pollution Control Department for consideration almost on 9 months before, 9 to 1 month, 1 year before. But so far, not only us, in that particular segment, particular area, all the manufacturers are not, they are not taken for the hearing. As and when they will be conduct the meeting and will be get the approval, this CB will be converted into PP, property, plant and equipment. And the capitalized part will be considered because without license, we cannot able to operate.
Okay. Yeah, that were my questions. Thank you.
Thank you, sir. Thank you.
Thank you very much. Next question is from the line of Gargi, individual investor. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, you mentioned that we have 800 plus dealers. So I just wanted to understand if my understanding is correct, that we don't cater to distributors and we directly deal with dealers. Is that correct?
Yes, 100%. You are 100% correct.
Okay, sir. Then secondly, how many fabricators are we in connect with as of now, and how often do we interact with them? Because peers are also dealing with fabricators and constantly engaging with them.
No, see, we are doing regularly. Your question, your point is very valid, and you are already gone through the market.
Sir, sorry to interrupt you. There's a bit of disturbance. Gargi, can you please talk through the handset? Go ahead, sir.
Hello. Ma'am, am I audible?
Sir, go ahead.
Yeah, no, that other ma'am am I audible? Hello?
Yes, sir.
So basically, we are regularly doing the fabricator meet in various places in the southern part of India, and we are engaging that fabricator with our respective area-wise dealer. That is our ground reality work. We are not supplying anything directly to the fabricator. We are cross-train the fabricator. We are motivating the fabricator. We are incentivizing the fabricators, and therefore the fabricators are directly. We are linking with our respective area-wide dealer, and that dealers are. Hello.
So the line for the participant dropped. We'll move to the next participant.
Okay. Yes.
Next question is from the line of Pawan, individual investor. Please go ahead. Pawan, can you hear us? Due to no response, we move on to the next participant. Next question is from the line of Shadab, individual investor. Please go ahead. Shadab, your line is in talk mode. Please go ahead with your question.
Yes, sir. Hi, sir. So due to recent QIP, we would be seeing increase in the number of share, hence affecting our EPS. With 2,500 crore FY26 in top line, how do you see that growth translating into EPS also?
In terms of EPS in 2,500 crore top line.
Yeah, in FY26, if we are targeting that, how do we see that translating into EPS? Because we would be diluting also our equity due to recent QIP, right?
Yeah. So see, basically in FY24 audited, our EPS is 20.34. Okay, na?
Yeah.
So after that, we are expecting now nearby 30 rupees for FY24. Okay, and
Yeah.
and almost all 30 rupees, 40 nearby 40 rupees we are looking for in terms of FY20, 43.
Okay, sir. 40-43 you are saying?
Yeah, which is a very good figure.
Yeah. Okay, sir. Yeah, all my other question I answered.
Thank you.
Thank you.
The next question is from the line of Kashish Gandodra, individual investor. Please go ahead.
Thank you for the opportunity. All my questions have already been addressed. Thank you.
Thank you.
Okay.
The next question is from the line of Praneeth Reddy, individual investor. Please go ahead.
Hello, sir.
Hello.
Are you able to hear me?
Yeah.
Congratulations on the set of good numbers. Government has sanctioned industrial corridors in Kurnool, Tirupati, which are in very close proximity for our plants. From our plants, can we expect any huge orders from these industries in industrial corridor?
Sorry, sir, I am not getting your point. I'm not getting your point. Can you please repeat one?
The government has sanctioned industrial corridors in Kurnool and Tirupati,
Okay.
which are in very close proximity from our plants,
Or?
from our manufacturing plants.
Okay.
Are we seeing any, can we expect any huge orders from these industries?
Orders, you mean to orders? Orders, or you meant to say we are going to expand?
No, orders.
Orders. Yes, Kurnool is receiving orders, and Tirupati also. In the Rayalaseema, we are selling our products. We are regularly getting orders. Not only for these corridors, we are regularly having tie-up and so many dealers. We are having substantial orders from that particular area. Even the most of the area, Hariom is dominating. We have no competition.
Okay, sir. Thank you, sir.
Thank you. Next question is from the line of Hemant, individual investor. Please go ahead.
Thank you for providing me the opportunity. Sir, as you mentioned previously, that we are...
Hemant, your audio is not clear. Can you speak through the handset, please?
Yeah. As you mentioned previously, sir, that we'll be having a revenue of 2,500 crores by FY26. Okay. But if I take a look at the H1 FY25 numbers, okay, we are roughly around 650 crores. So is it H2 heavy? And if it's H2 heavy, then what sort of revenue are we targeting for FY25?
Sir, your question is very correct. We have targeted for 2,500 crores by FY26, and if you take into the consideration of H1 FY25, it is 659. So it is whether it is almost 1/4 of the targeted figure for March 26. So whether we can able to achieve. So now the point is, yes, it can, because sometimes it happens in our life, some unavoidable circumstances which is beyond our control, beyond our strategy, happen. And this was happened in the last 6 months in India, not only with Hariom, it has happened with other players also. If you check with their figures, their performance, it is drastically come down. So it is Hariom keeping all negativity, Hariom is doing extremely well. Now your point is whether we can achieve